An absolute disaster has hit all legacy automakers in their most important market, China, which is the biggest car market in the whole world. If you are from Europe, you are very familiar with Peugeot and Citroën. They are now offering 40% off the C6 sedan that now starts at $18,000 in China. Ford cut the Mustang Mach-E by about $6,000, while GM's Cadillac CT5 is now about 25% cheaper. Ford sold just 84 cars in China last month, down from some 1,500 in December. A BMW dealership in Guangzhou had cut the electric i3 by $12,000 to $51,000. Volkswagen's joint venture with the Shanghai government trimmed the cost of its cars by between $2,200 and $7,300. This is total war. Car sales in the first 2 months of this year fell by almost a fifth compared to last year. An Audi dealership recently put a meters-high sign in the shop window screaming, "We sell EVs too." Mercedes-Benz lowered prices of its brand new EQE and EQS models, some models even by as much as $30,000. Crazy. The same goes for BMW too. There are some huge discounts for the i3 as well as i4. And Volkswagen is offering $537 million in cash subsidies for car purchases in China, joining more than 40 brands in slashing prices ahead of a change in emissions rules in the world's largest auto market. And Dylan just reported on this. Dealers of gas-powered cars want to clear out roughly 500,000 vehicles in their inventory, which include older models that won't meet tighter emission standards due to take effect in July. But I don't think it's just that. I think these automakers are doomed. They are not transitioning fast enough to EVs, and people are not that interested in their cars. And the EVs that they do make are expensive and not compelling, and they don't work as well as Teslas or even BYDs. Toyota went as far as to actually co-develop a vehicle with BYD, which is really a BYD vehicle. Why would you buy that vehicle from Toyota when you can actually go and purchase a vehicle from BYD, which is likely to actually be better because, it's not a Toyota and it's fully electric? But overall, this is a complete disaster for all of these automakers. Tesla, of course, is a leader, and Tesla cut prices first. But the difference is Tesla can, because Tesla had huge profit margins. These other automakers, they can't really afford to cut that big. I mean, if you cut your prices by 40%, how are you going to make money? And Morgan Stanley, they say, we believe EV price cuts are not a fad, but a trend. And I think perhaps you can say the same thing about internal combustion engine vehicles, except they are losing sales because people don't want gas-powered cars as much as they did before. Some people still want them, and they will buy them for now, and so these automakers will make them for now, but they sell less and less and less every year. They lose economies of scale, and they should really lower the prices if they want to stay competitive with EVs, but they will not be able to do it, so they will have to actually increase prices as their volumes fall down. That's a recipe for disaster, as it will further accelerate the collapse in demand. While subject to volatility, investors should anticipate further price cuts in EVs, with cost leader Tesla setting the tone. Morgan Stanley believes that it is rational for Tesla to cut prices because Tesla has the scale and it has the cost leadership as well in the global EV market. Tesla sets the standards, and if Tesla does not cut prices, someone else will. If you cut prices early, you suffocate the competitors. There's an interesting thing going on with affordability. There's a gap in the market for $25,000 vehicles with a sub $400 monthly payment. Discussions with auto dealers suggest sticker shock for new prices, As many legacy OEMs have abandoned entry-level offerings, it's up to cheaper EVs to fill the gap. So these automakers are already conceding that part of the market. They're not even trying anymore. And pay attention to this one: incremental supply recovering relative to demand. A recent price war in the Chinese market led by Tesla and BYD and joined by many others has global implications for EV supply and demand. Anecdotal information from OEMs and suppliers suggests chip shortage is beginning to move into the rearview mirror. I just need to correct Morgan Stanley right here. The price war was not led by BYD. It was led solely by Tesla, and then BYD got affected, and then BYD started dropping prices. Morgan Stanley also points to falling lithium prices. There has not been a single day where I check lithium prices and they are not lower. Every time I check, the prices are lower again. And then we have this whole banking crisis that will certainly probably affect lending negatively. Recent events in the global banking world may drive tighter lending standards and may have an adverse impact on financial institutions' willingness to fund car purchases at the margin. And the bottom line is, we are prepared for price cuts to be an established feature of the global EV market. As the supply-demand environment continues to change, we would prepare for potentially lower margins at gross and OP than consensus currently forecasts for Tesla. This could potentially drive more opportunistic entry points into the stock. At the same time, we believe Tesla's EV competition, startup and legacy players will continue to struggle to catch up, driving restructuring and consolidation across the EV landscape. In terms of better entry points into Tesla stock, if you really look close at the chart, clearly there's a pattern. The pattern shows the classic Disney castle pattern. Obviously, how could anyone not see this? The question, though, is this bullish or bearish? Now, that I'm not sure about. I don't rely on technical analysis to make purchases of Tesla stock. I just keep buying every month. It's also probably not difficult to guess that battery prices will fall. Look at production in China. You can see that it is quite high and it's above this, which means to me, probably the prices will get more attractive. Here's another example of Tesla being extremely efficient. This is the first remote test drive hub in Europe, which is now open in Sweden. So you just show up here basically, and then Tesla remotely opens the car for you, unlocks the car for you, and then you can go drive it for like half an hour. That's amazing. But sometimes ideas that seem amazing at first turn out to be horrible. Let's see how this goes. Hopefully no one trashes the cars. I completely don't understand what Toyota is doing here. Toyota says they are completely focused on EVs now, but they also say they're not giving up on hydrogen technology. I wish SpaceX was a public company. Provided there is no serious launch anomaly, SpaceX will deliver 80% of Earth's payload to orbit this year, not counting Starship. Wow. I know many of you are excited about the new full self-driving version. If you don't have it yet, don't panic. Usually Tesla rolls new versions out slowly to some people, and then the rollout gets bigger and bigger and bigger. Here's how you can know if you are eligible for the newest version. And also, recent software builds only allow you to check for new updates once every 24 hours. Your vehicle can still receive updates if pushed to you, but you can't check yourself. So just check once every 24 hours. Don't bother with checking once every hour or so. Also, make sure that you are connected to Wi-Fi, and you may want to actually manually check. So go into your car, open the settings, and make sure that there are no new updates. And did you see this? Great franchise, says Jim Cramer and other Wall Street experts. They said that the panic over Credit Suisse is highly overblown, and why now might be an opportune time to jump in. 2022, October 5th. If you are concerned about Credit Suisse, you may want to check out the Tesla stock buying opportunity explained by Elon Musk. My name is Mal Posius. Like and subscribe if you haven't yet, and I'll see you in the next video. Thank you so much for watching.